Good afternoon, ladies and gentlemen. My name is Rob McEwen. I'm the chairman and chief owner of McEwen Mining, and it is my great pleasure to welcome you here today for McEwen Mining's 2018 debut. There's a couple of things I have to deal with. In the next hour and 45 minutes, you'll hear about the considerable progress we've made this year while the gold markets have been fast asleep. This will be followed by a Q&A, and there's an agenda right here. We'll have a number of speakers. Their bios are all contained on the website for this. And we have a safe harbor statement that basically says, if you don't like risk, don't bother buying our stock. Now, I'd like to say we are a big believer in exploration and that it can create enormous value. Second, that we push boundaries. And third, innovating creates a competitive advantage. Today we've gathered some of our best and brightest to tell you about what we've achieved, why it's important, and how we are addressing what some people consider our shortcomings. Short mine life, high production cost per ounce, and little growth. During the year, our Mexican operations, El Gallo, was forecast to close, but now we have a plan that could give us another 12 years of mine life there. During the year in Nevada, the construction of Gold Bar and exploration around it began, and both are moving quickly ahead at this moment. Already we see the potential to extend Gold Bar's mine life by 50% to more than 9 years. Historically, we've always been exploring there for shallow oxide deposits that can be processed by heap leach. Today we have some deep sulfide exploration targets where we'll be hunting for elephants, the larger Carlin-style mineralization. During the year in Timmins, we've been working at Black Fox to reduce the production cost per ounce while exploring to extend its mine life and identifying new resources on this underexplored property package. The Black Fox mine I find most intriguing because I see a close parallel between it and the Red Lake mine, which was the key asset for Goldcorp when I was building Goldcorp. Both mines were underexplored, had high production costs, lacked a sense of urgency, and were essentially neglected. Someone's coming in the room. By senior head office management. But, and there's a big but, they both had a history of high-grade gold. And I'd like to show you a picture that will help you understand that comment. Where did this go? Okay. Right now you're looking at a slide that's showing a cross-section, and up at the top of the slide you see a green outline, and that shows the open pit outline, the bottom of it, of the Black Fox mine. And then you see the workings below it. And shown in sort of a pinkish color is where we have gold grades in our resources of 3 to 5 grams, and in red above 5 grams. And then we look again, and this is the distribution of grade above 10 grams in our resource. Gets a little sparser, but above 30 grams. And there's even some 50 grams that are very hard to detect at the moment. But the Red Lake mine was very similar to that. It had a lot of gold, but they hadn't put it together. So, I want to share a short story with you about Red Lake. With the assistance of the union, we stopped mining at Red Lake for 46 months. During that period, we funded a large exploration program, gained a better understanding of the geology and the deposit, and that allowed us to develop a dynamic new mining plan. And then we tore down the old processing plant, replaced it with a state-of-the-art facility. When we restarted, annual production pre-strike had been 50,000 ounces a year. After we started the new plant, we were up to 500,000 ounces a year. Our cash costs went from $360 an ounce pre-strike to $60 an ounce. This was a 60-fold improvement. It was a profound transformation of the asset. I'd like you to reflect on, could this type of transformation happen at Black Fox? The slides you just saw suggest that such a transformation may be a possibility. And wouldn't that be fun if it was? At Los Azules, 3 developments have dramatically improved the value of this large copper deposit. First, the McEwen government in Argentina, in a move to encourage foreign investment, removed 2 years ago the export tax on mineral concentrates. This action combined with a second development, our decision to develop Los Azules in 2 phases and produce a copper concentrate, has significantly improved the economics of the project. And the third development is all about transforming the site from being remote and accessible only 4 to 5 months of the year to having year-round access and providing a low altitude, lower cost power corridor to site. The access routes that we've planned will definitely increase the attractiveness of Los Azules as a possible joint venture or sale. Recently, unfortunately, the government of Argentina has reinstated the export taxes in an effort to gain foreign currency, which has reduced the economics of Los Azules, but it still remains quite robust. We're growing, our momentum is building, and I'm excited. And I hope you will be at the end of this session. We've all seen how undisciplined growth can destroy share owners' equity, and I'm not prepared to raise funds unnecessarily that would dilute yours and my interest, nor am I willing to sell future revenue to metal streamers or hedgers or royalty companies. I have to say I'm very protective of our share capital, and that's why we borrowed $50 million rather than raising equity capital this summer. Our share price was low. Why sell the shares when they're low? Borrow the money, it's like a bridge. I put up half of the debt issue. It was a $50 million debt issue. I put up half of it, and that thereby has increased my investment in the company, my cost base, to $160 million. And that's part of my commitment. I also get $1 a year, and I've elected to take no bonus or options. So why such a big commitment? I'm a big believer in our future, the potential of our properties, the skill of our team, and the power of mining to make a meaningful contribution to society at large. So now it's my pleasure to pass the podium over to Chris Stewart, our President and Chief Operating Officer.
Thank you, Rob. I have to tell you, I just recently joined McEwen Mining, and I've sat through the presentations you're going to see here today, probably 5, 6, maybe even 7 times. And you know what? Every time I hear it, I get excited about the future of McEwen Mining. Well, I think of myself as a mining guy and getting the rock to the box, as we say. I've always been a big supporter of exploration. We've made substantial progress on a number of fronts in 2018, but exploration results in Timmins and Nevada have been exceptional, and Sylvain and his team will speak about that a little later today. I believe in challenging the status quo, looking for ways to improve our business. Challenge, the phrase I hear all too often. That's the way we've always done it. You have to think outside the box. Look at using technology. We want to make our operations safer, more productive, and mine at lower costs. Rob has big plans for this company, and I think when you take everything presented here today in its totality, you'll have to agree we've got a winning combination. Great people and great assets. The properties within our current portfolio are world-class. In particular, the Gold Bar mine in Nevada sits on the excuse me, the Battle Mountain Cortez trend and our Timmins operations, they sit on the Destor Porcupine Fault. Both of these structures have produced tens of millions of ounces of gold, and they continue to produce gold today and generate new large gold deposits. Every gold company dreams of having a land package like we have. Oops, sorry, I gotta get going. My bad. I was just in Nevada last week visiting our Gold Bar mine, and the construction of our new mine is on budget and on schedule to start producing gold in 2019. We're taking a structured approach to our business from both an exploration and operations perspective. And the goal is to align our exploration drilling efforts so that we are expanding resources in areas that the mine operations can take advantage of in the short term to convert into reserves. Adding mine life and lowering our cost per ounce are currently our main focus. We're proceeding with our feasibility study for Project Phoenix in Mexico with a plan to add 12 years of mine life to that operation. And we continue to progress various permitting matters at our mammoth Los Azules copper gold project in Argentina. So I have a quick little story for you. Before beginning with McEwen Mining, I did a bit of research on the company and Rob. And I came across a YouTube video of Rob doing an interview while at the Zurich Gold Show last year. And he said a couple of numbers that really stuck in my mind about Los Azules. Yes, it's a copper gold project, but if you think purely in gold terms, that deposit has 78 million gold equivalent ounces in the ground. And we can mine that for under $500 an ounce. Just think about that for a second. Like, that's amazing to me. So we have people here today from each of our operations and projects. We have Rick Anderson and Chris Price from our Black Fox mine, Simon Quick and Jeff Snyder from Gold Bar, Adrian Blanco from El Gallo, Donald Brown from Los Azules, and Nigel Fung from our Lexan properties. We also have our Director of Innovation, Nathan Stubina, who will talk about some of the ideas we're working on as we look to be leaders in transforming the mining industry. I look forward to meeting you after the presentations to hear your thoughts and answer any questions you may have. And I will now pass it over to our team, and they will take you through the details. Chris?
Thank you, Chris. My name is Chris Price, and I'm currently the business manager at the Black Fox mine site. Today we'll be treated to some very exciting exploration results from the exploration program at the Black Fox complex. However, I'd like to tell you that this is only half the story. Rick and I are going to walk you through the reasons why our near-term and future production plan is just as compelling a story. We'd like to start by showing a map of northeastern Ontario. This map shows the current McEwen-owned land packages in the historic Timmins and Madison mining camps, which have produced over 70 million ounces of gold. Highlighted in black along the middle of the map, you can see the Highway 101, which is locally known as the Highway of Gold. Built upon the Destor Porcupine Fault Zone, home to several active and depleted gold mines. In the center of the map, you can see our Stock property, which houses the mill and the Stock East Exploration Zone, which sits equidistant between the Timmins properties to the left and the Madison properties to the right, which hosts the Black Fox, Froome, Tamarack, and Grey Fox deposits. With an indicated resource of over 2.9 million ounces and a probable reserve of only 113,000 ounces, there's a huge opportunity in simply converting indicated resource to reserve. Speaking strictly on the indicated resource of the Black Fox complex, you can see the breakdown of the over 1.3 million ounces contained. Black Fox with 567,000 ounces, Froome with 181,000 ounces, which is reported this morning, Tamarack at 126,000 ounces of gold and gold equivalent, and Grey Fox at 665,000 ounces. As you can see in the graph, Black Fox has struggled to producing a mine life of anything more than 2 years, as depicted in the green bar. However, under McEwen ownership, we are beginning to build a much better story and extending the mine life beyond the 2-year mark. The strategic plan for the Ontario operations is to bring 4 to 5 mines into operation to fill the capacity of the centrally located mill. How are we doing this? Convert more of the current Black Fox resource to reserve to extend the mine life both laterally and at depth. continue to mine the Black Fox current reserves into 2020, which will allow us to bring the Froome project into full production by late 2019 and early 2020, while we continue to grow the resource at both the Froome main zone and the footwall zone. We also develop a plan for Grey Fox and for the Tamarack zones. In an effort to reduce our cost, we've undertaken a number of initiatives. On the screen you'll see a number of them listed. Starting at the top, our energy conservation should decrease the cash cost per ounce by $39, mostly through the reduction of our global assessment costs, our adjustment costs, projected to be about $2.5 million next year. We've also conducted compressed air audits, which reduces the wasted air underground, and the simple act of turning off unneeded energy consumers have helped to drop the price. Next, automated ventilation, which will have the ability to turn fans underground on and off remotely, will conserve energy in between shifts. And the next steps to this will be to implement ventilation on demand, which utilizes wearable technology that tracks our people, assets, and equipment so that ventilation is off when no one is present and turns on automatically when someone approaches. This will produce further savings while keeping our people safe. Our backfill plant upgrades will be installed by a vendor at no cost to the mine and should help produce about a $3 decrease in cost per ounce. Our engineered backfill walls are allowing us to stop moving so much material underground, and we look to save about $140,000 this year and considerable savings in the future as we continue the long hole mining method. The last you see on the list here is remote gas monitoring, which allows our crews to re-enter the mine faster, increasing production, and will provide another level of safety to our workforce. Combining these initiatives results in a $63 decrease, or about an 8% reduction in our cash cost per ounce. We will continue to explore opportunities in innovation technology and increasing operational efficiencies to further reduce these costs. The previously mentioned efforts have had a positive impact on our cash cost per ounce since McEwen Mining acquired Black Fox back in October 2017. As you see the graph, Primero had a 4-year average cost of approximately $870 per ounce, highlighted in purple. We are forecasting to produce at about $650 per ounce for the remainder of 2018. We will continue to strive to reduce our production costs and become a low-cost, high-production asset in the McEwen Mining portfolio, utilizing innovation and technology to accelerate this process. I would now like to introduce you to Rick Anderson, our General Manager of the Black Fox Complex.
Thanks, Chris. I'm going to speak today to some of the operational things that are going on site. The first one being the Froome property. This had a resource before, but we've added to it. The press release today, as well as in the you'll see in the salmon colored. That's a new gold occurrence, which we just recently discovered, and Ken Tylee will talk to it a little bit later in his geology presentation. Construction of the access ramp to the Froome portals is complete. We'll be commencing the twin decline drives in October, and they'll be completed in November. And the important thing about this property is it's only approximately 1 kilometer away from our current Black Fox mine. And we can utilize the existing surface infrastructure and reduce our capital costs required to bring this project into operation in 2020. Our Grey Fox project, shown on this map, are ore bodies in relation to the rest of the Black Fox land package. And you'll see on the bigger picture on the left-hand side, that's the 3 ore bodies, the 147 zone with indicated resources of 268,000 ounces. The contact zone in the middle left is indicated resources of 71,000 ounces. And the bottom right, the Grey Fox South Zone with an indicated resource of 127,000 ounces. What we like about these deposits is, again, the close proximity to the existing Black Fox infrastructure, the ability to access the ore from an existing portal or from a rock outcrop that's very close to surface. And there's no mill upgrades required to mill this ore body. While still in the permitting phase, this project will add value to the company by the year 2022. And this just shows the 147 zone. If you see in the top left, that's the surface outline. And this conceptual drawing of the 147 zone at the Grey Fox project is using a cutoff grade of 3.4 grams per ton. The blue line is the proposed ramp down the ore body, approximately 15% grade to the actual ore body at the 180 meter elevation. This is an exciting ore zone as production could commence again as early as year 2022. Before I move on to the next slide, I just want to talk a little bit about the Black Fox team. When I started the Black Fox mine in 2017, I remember printing the first mill report dated March 1st, 2017 that had the mine behind 5,552 ounces for the first 2 months. Getting people working together in a team environment, I'm proud to say at the end of 2017, the Black Fox mine was ahead of budget planned by 7,212 ounces. This is an example of what the people at Black Fox are capable of doing. I'm excited that we have a tremendous opportunity to grow the Timmins McEwen mining assets into a world-class gold producer. And this one is showing some of the Black Fox production exciting rocks that we have on site. In the exploration section of this presentation, you will see many pictures of core. So to finish off the Black Fox operation piece, I'd like to show you some of the broken material from the upper portion of the mine. If you follow the red arrows, you can see beautiful visible gold contained within the sulfide quartz veining. This is material that previous owners had given up on and left behind. Under McEwen ownership, the technical team has focused on the upper remnant areas of the mine. We've had great results finding mining areas that are previously dismissed and can be mined using alternative mining methods. In summary, the Ontario operations are proposed to bring real value to the company and its shareholders by lowering production costs, increasing production, adding near-term value-added projects, and extending the mine life. We look forward to any questions you may have at the end of this presentation. I'd now like to introduce Simon Quick.
Thank you, Rick. Can everyone hear me okay? Perfect. So my name is Simon Quick, and I'm here to give you an update on Gold Bar construction and tell you about the exciting things that are happening on site. I'm along with our general manager, Jeff Snyder, who's sitting in the front. Depending on which side of the fence you sit on, I either pulled the long or the short straw here. A bit of background. We received our permit to construct November 7th, 2017. Within 24 hours, we immediately mobilized the construction crew and began construction. From shovel to first gold pour, we are targeting 14 to 16 months. This is an aggressive schedule. However, we think it's a true testament to our project planning and our execution philosophy. As you can see from the map here, Gold Bar is located roughly 8 hours north of Las Vegas by vehicle, or an hour and a half southwest of Elko. Some key metrics. To date, we've spent $55 million at Gold Bar. The project is on track, it is on budget, and it will produce 55,000 ounces of gold in 2019, followed by 60,000 ounces of gold in 2020. As you note today in the most recent press release, the resource is growing, and our exploration team and mining group is extremely excited about this new project for McEwen Mining. Shown here is a site general layout. As you can see from the top left of the screen is our natural gas power plant generation unit. Just below that is the ADR gold recovery circuit, and lastly, the process ponds. If you scroll to the right of the screen, you will see where our crushing and conveying system is currently being constructed. That will deliver ore to the leach pad. And finally, you will see the heap leach pad that is nearing completion. Over the next couple of slides, I'm going to go into a bit of a deeper dive of each construction area, provide you an update and a % completion, as well as when it will be complete. Currently, just to give you some perspective, there's over 150 contractors on site. It is a very busy place, and safety is our top priority. So to the left, as I mentioned before, this is the ADR facility that is roughly 45% complete. We expect to commission this facility in December of this year. And to the right, we have our crushing and conveying plant that is 70% complete, and we will have this operational towards the middle of October. As you can see denoted in the 2 circles, those are the 2 remaining generators that have yet to be delivered on site. They're targeting in September 14th of this month, and the first one was delivered, installed in July. This system will turn on in November and will provide sufficient power to complete construction and operate the mine for the next 7 years. And to the right is the heap leach pad that I mentioned before. It's nearing completion and will be finished in October. Active mining development is currently underway both in the waste stripping and ore stockpiling at Gold Bar. Principally, the 2 pits will be Pick West and Cabin. As denoted on the left with the red circle is the daylighting ore at the Cabin pit that is being hauled and stockpiled, as you will see denoted on the right with the red circle, and the crusher just south of that. So upon completing the crushing circuit and power generation, we will begin to deliver ore to the leach pad. Again, our guidance for next year is 55,000 ounces of gold, and the following year, 60,000. As said before, we are extremely excited about this project, not only from a construction and operations perspective, but the continued resource growth it is demonstrating. Currently, we're utilizing 2 primary strategies to accomplish this growth. One is opportunistic near mine property acquisitions. We purchased Gold Bar South, as you can see just to the bottom right-hand corner of the screen, for $450,000, and that added over 100,000 ounces to the resource base. On a comparison to Gold Bar metrics, that's roughly $15 million in cash flow. The other item that we're using for an option to increase the mine life is aggressive exploration that Sylvain and Charlie will discuss in more detail. But upon permit receipt late last year, we embarked on a 75 drill hole program that cost around $2 million and added over 100,000 ounces to the resource. So again, on a metric by metric comparison using Gold Bar, where that material will be processed, that's roughly $25 million in cash flow. This is cheap exploration dollars and property acquisitions that really generate to the bottom line profitability of this operation. We are drilling now and will continue to do so. This is a short slide just to walk you through the timeline of this resource growth over the last couple of years. So starting from 2015, between a property acquisition, model optimization, and exploration, this resource continues to demonstrate growth potential, and we are incredibly excited. And I apologize for the colors, but I think this slide is important as it aims to depict where the new resource will be located relative to the 75 holes versus the previous one. So in blue, that is the 2015 resource, and in yellow, that highlights the 75 holes and where they were located on the pit perimeters, as well as infill holes. As I cycle back and forth from red and gray, you will see the pit expansion potential. Our mine site team is currently evaluating this resource expansion and will deliver an updated mine plan in Q1 2019 to demonstrate the increased growth of this operation as well as profitability. Lastly is highlighted by Rob. Technology is a key pillar to this operation and this company. What's most important is we try and do things differently that end up reporting to the bottom line of these operations. Akin to what we did in Mexico, we're going to utilize heap leach pad sensors, which to our knowledge no other company is currently using. The idea of this technology is to insert sensors within your leach pad that gives you a window into how much leach solution the ore is receiving and whether it's too dry, too wet, is not receiving enough coverage. As you can see from the bell curve, red signifies that the area is not receiving enough solution and the operators need to either move the drip tube or increase the flow. As you get up toward the top peak green, which you're reaching optimum conditions. And on the flip side, as you continue down the curve towards the blue, is when the ore is too saturated. The goal here is for operators to use real-time data and to make this pad more efficient and overall increase recovery. And as you can see to the right of the screen, as I mentioned, this is a true snapshot of what our Mexican operation generates, and again makes us a more efficient operator locally to determine what areas are not receiving enough solution, modify that operation, and again continue to move forward. Thank you very much.
Thank you, Simon. Good afternoon. My name is Sylvain Guerard. I'm SVP Exploration. When I joined McEwen Mining a year and a half ago, during the first meeting with Rob, he asked me this question. He said, "You've been around the world exploring in many countries. and you've been quite successful finding a lot of gold. Can you tell me how you did that? My answer was quite simple. I said, you know, first I work with great people, and exploration is always a team effort. And second, and very important, you have to work in the right places. You have to work on the right projects to be successful. When I look at McEwen Mining portfolio, as you can see, they had a great land position in the Americas. And more specifically, projects in some of the best regions for gold in the world. Along the Cortez Trend in Nevada, in the Timmins camp in the southern Abitibi. And I told Rob, this is exactly where mining companies dream to have projects, and this is where we should focus our exploration effort. I'm going to give you an overview of our exploration at Black Fox, the Black Fox complex, and also Gold Bar. And our exploration manager, Ken Tylee, and Charlie Sulfrain will give you more detail about the results and about our targets there. As you know, exploration is extremely important for McEwen Mining, and it's a key component of our vision to grow and to qualify for the S&P 500. Our properties host significant mineralized gold system, and I believe the exploration upside potential is excellent to grow the known mineralization and known deposit, but also to make new discoveries. We bought the Black Fox complex 11 months ago, and we've got a mine, a mill, and 1.2 million ounces resources in the ground. So one of our first objectives is to convert a portion of this resource to reserve, and we are advancing with this effort. Another very important objective we have there is to make new discoveries. And from my very first visit at Black Fox, I was very impressed with this property. It has all the right ingredients for a great exploration project. And I've been exploring in many regions and many greenstone belt, and I could say that the only thing that was really missing here at Black Fox was more exploration and more drilling. A few things that I like about the project, as you can see on the slide, it sits along the Destor Porcupine Fault, just east of Timmins. And this break goes mostly east-west until it gets to Black Fox, where there's a major change in the orientation of the Destor Porcupine. It goes from mostly east-west to northwest-southeast. And this is a very good indication. And there's a lot of things happening on this property. If you keep going along the same break to the west, the next big deflection is the Timmins camp, where over 70 million ounces gold have been produced. The property was underexplored, despite being in a great mining regions, close to a mine, and having a lot of obvious quality exploration targets. So this was quite positive. As Rob mentioned, it has a lot of high grade, and also quite a lot of gold, over 2 million ounces on the property, including past production at the Black Fox mine. There's 4 deposits already defined on this property. And those 4 deposits are sitting on 4 different structures. So that gives us a lot of room, a lot of space to explore and to find more mineralization. Finally, another thing that we find quite positive, the gold is hosted in all type of rock at Black Fox. It's not limited to 1 favorable unit or 2. It's all rock that could be mineralized. So all those points are clearly indicating a very strong and powerful system. It also suggests multiple phases of mineralization, multiple pulses. And of course, this is very positive support and strong indication of more upside potential. So what we did at Black Fox since acquisition, it's really to assess the full potential of this property. And the first thing we saw is that we need to improve the geological understanding, and better define and prioritize drill targets. So our first step was a major commitment, financial commitment to exploration, and we also built a team. We added over 10 geologists, over 15 technicians to the Black Fox team, and this is absolutely key. The second step was to define and prioritize quality drill targets. And to do so, and to accelerate this process, we had two large brainstorming sessions with over 20 geologists. Of course, McEwen geologists, but also former geologists that work at Black Fox with other companies, former exploration manager, and also external expert consultants. So we've got all of those people together to really understand what's going on with Black Fox. And this was extremely successful. As an example, you know, the focus was on the Black Fox property. And during one of the meetings, one guy came and worked at the stock mine and told us, oh, there's a great target just east of the mine and close to our mill. That's Stock East. So we prioritized this target and started drilling there 6 months ago. And we are just releasing our first resource. It's very close to our mill. It starts near surface. And so far this year, we drilled over 20,000 meters at Stock, over a 2-kilometer priority area that also include the depth extension of the mine. And Ken is going to talk to you in more detail about that. Regarding program execution, and this is also very important to be successful in exploration, we make sure that everything is done with a sense of urgency. So when we get new results, the results get integrating in real time to our program. So we can really react, adjust, and prioritize as the information get added to the program. So far this year, we drilled over 80,000 meters at the Black Fox complex, and we will be easily drilling 100,000 meters by year end. Regarding results, now we made some very good initial early stage progress. And as I said, we just released resources again today. And those resources are coming from near our mine at Black Fox and also near our mill at Stock. At Black Fox, we produce an indicated resource of 127,000 ounces gold equivalent, because that includes silver and base metal, zinc and lead at Tamarack. And we increased the Froome deposit from 159 to 181,000 ounces, so that's a plus 22,000 ounces gold. At Stock, as mentioned, we have the Stock East resource with 114,000 ounces in open pit and underground resource ounces. And this is not all. We made a lot of progress with real exploration early stage, and we have generated a lot of positive intersection, including very high-grade hits. I'll give you a few examples. We hit 493 grams per ton over a meter at the footwall target near Froome, not the Froome deposit, another target close by. We also hit 639 grams per ton over 0.7 meter at the Gibson Southwest, and this is the first hole we drill on a new structure. It was a pretty good start. At Stock, we have good results over 2 kilometers strike land that include the old Stock mine, and we've got grade of up to 30 grams over 0.8 meter on the down plunge of the mine. In addition to the high grade, of course, we have lower grade intersection from 1 to 3 grams over tens of meters. Moving to Nevada, also very interesting site. And November 2017 was extremely important for us. Not only we received the permit for building the mine, but we restarted exploration. And keep in mind that this site I've seen no exploration for the previous 5 years, no exploration activities at all. So we are just restarting exploration on this great gold bar project right along the trend and just southeast of the large Barrick mines there. Our initial focus have been to drill around the pit. You know, we want to extend the mine life of the oxide heap leach operation to 9 years. So we drill around the pit. Simon talked about that. We also are integrating the Gold Bar South property into the plan there. And we are looking at historical waste dump. The previous operator, using a mill, was having a cutoff grade of 2 grams per ton, which is many times the cutoff grade of our current feasibility study. And this is not all. You know, a few more things happened since we reactivated. We reinforced the team. I'm always back on people. This is absolutely key to our success. We started to drill additional target for oxide mineralization. And for the very first time at Gold Bar, we have completed all key surveys and we have all the data that allow us to develop quality targets and really develop the geological understanding. And just as we did for Black Fox, we had a large workshop at Gold Bar, and we invited former Barrick geologists, so guys who work on large carbon gold deposit. And we wanted them to calibrate Gold Bar and tell us about what they think about the potential of Gold Bar for larger, hopefully higher grade sulfide mineralization in addition to the oxide. And I can tell you that every geologist in this room was extremely positive about what we have at Gold Bar. To conclude, I would say that our exploration is progressing very well in Timmins and Nevada. We have a strong team, we are applying the right approach, and we are exploring in high quality projects located in very good regions. I strongly believe that this is just the beginning of a very interesting story, so stay tuned for more news. Thank you. Ken, over to you.
Hey there, I'll see if I can get the mouse working here. Yes, okay. My name's Ken Tylee. I manage the exploration efforts up in the Timmins area for McEwen. Moving the slides forward. I'm going to try and spend the next 20 minutes. I'm going to try really hard to keep the rock talk to a minimum. What I want to do is focus on opportunities. Everyone just keep that term in your mind for the next 20 minutes. It's all about opportunities. 2018 has been great for us up in the north. We've made excellent progress. We've built a team. We've seen a 300% increase in our exploration activities over the past few years. This has led us to drill over 100,000 meters surface and underground. And through that drilling, we've been able to add about 14% increase to our resources at the Froome deposit. As you can see, we have also just recently, last night, added 114,000 brand new resource ounces at our Stock East zone. And we also have, back in the springtime, announced that we have 127 ounce gold equivalent at our Tamarack base metal gold deposit, just 800 meters away from our miners. Okay? Through all this work, we've come up with 9 new exploration occurrences. That's what I'm going to be talking to you about over the next little bit. So where are we situated? It's about a 2-hour flight north of here, and then you jump in a truck and you head out eastwards for about an hour on Highway 101. It's a very well-endowed mining community. 70 million ounces have been generated from over 50 mines in the Timmins-Matheson area since 1910. It really is a world-class place to explore for gold. You can see where our 2 properties are located, right along the Dester-Porcupine Fault Zone. This acts as a conduit. I'll try and zoom in the focus a bit here. So you can see where our 2 sites are located, right along the Dester-Porcupine. They straddle this broad deformation zone, lots of openings, lots of voids for those mineralizing fluids to exploit. And along with those mineralizing fluids comes the gold. Okay, so you can see how we're ideally situated. So, prior to McEwen's involvement, very little exploration has really gone on in a regional sense on the Black Fox property. Our predecessors, such as Primero and Apollo, spent a lot of time and effort developing their concepts around the Grey Fox resource area there in the southeast, you can see, and in the northeast at the Froome deposit. Most of this drilling, look at the clusters of the black lines there. Most of that drilling they did was spaced at 12.5 meter centers, but they only drilled down to about 350 meters of depth. Look at all those gaps. If I can use my cursor, and I can't see it. See all the gaps along that break between the dark gray and the pale gray? That they're just dying to get a drill hole in. Some of those gaps are up to 3 kilometers in length. If you look at the the Black Fox footprint, that red footprint, look how many opportunities you could have to put that along the remaining areas that don't have a single drill hole. So, you know, always in any mine, no matter where you are, job number 1 is replacing reserves resources, right? So throughout 2018, our mine geology department has had at least 2 rigs drilling off in these areas. You may recognize this slide that Rob showed earlier. These are our mining blocks that grade greater than 10 grams. We've had rigs in there churning throughout the year, going back, reevaluating these mining blocks, trying to expand them and get them into our mining plan. As far as exploration goes, I'm going to spend the next couple of minutes talking about 3 near-term opportunities for us. At the deep central extension of the mine, the Tamarack base metal occurrence, and again at Froome. You can see they're all located within 800 meters of our operations. So, leading into McEwen's acquisition of the property, very little down plunge exploration went on in the main Black Fox ore body. It was just a combination of low budget and poor ground conditions and a lack of excavation sites to get the drill rigs into. But you can see they still had a half a dozen hits down the plunge of the main chutes there. Look at up to 21 grams over 0.8 meters. Okay, as a typical gold deposit in the northeast, think of short strike length, long plunge length, heading down, in this case, to the west. This is where we are today. We were able to get drills into certain areas of the mine, and we were able to arc some long holes down into that deep sort of extension of the deep central zone. Look at that, we got 55 grams over 1.2 meters of core length. This certainly indicates to us that the zone is not dead. It's still continuing at depth. It's still looking really good. Lots of visible gold. 320 grams over 0.6 meters in that central area. Okay? This really excited us, and we focused on that for the remainder of the year. And as I said, this is what we're doing now. You can see the vectors there. We're still open to depth, open down plunge. We have a drill excavation underway. A 200-meter drill drift is coming from the bottom of our ramp at the 800-meter level. It's going to go out, and by September 15th, we're going to be collaring our first holes to infill that gap between the bottom of the ramp, as you can see, and where that yellow star is, where that recent really nice hit was. Okay, we're hoping this should, if everything works out with the grade, the average grades, the way they have been for Deep Central, this should be able to get us a reward of approximately 100,000 ounces to add to our resources category. I wanted to spend a couple minutes now talking about a second opportunity that's, again, very close to our workings. This is the Tamarack base metal zone. This was discovered back in 2004, but over the following 12 years, the previous operators, you know, didn't really have the, I guess, the metallurgical confidence to deal with this. You can see the amount of massive sulfides in there interacting with a very, very strongly developed quartz vein stockwork breccia system. Lots and lots of good values. Look at that, 7.5% zinc, 5% lead, 92 grams silver, right? And it's all relatively shallow, minus 150 meters vertical. So we went in late 2017. We drilled 7,500 meters from drill rigs we had placed around the parking lot, around our mine infrastructure, drilled into the zone. This is a nice picture looking eastwards. And you can see the zone there is situated, it's perpendicular to the main gold-bearing chutes. And it's near surface. You can see those nice warm or hot colors indicating better gold equivalent grades up close to surface. That blue arrow indicates it's just a 500-meter vector away from our main production ramp. Back in the springtime, we had SRK come in. They looked at all our data, all our drill results. They've come up with a new resource, 127,000 ounces at 5.1 grams, and this is a gold equivalent. This is taking into account the gold values plus the lead plus the zinc plus the silver, right? We're looking at this as a fantastic opportunity to sort of extend our stream of multi-minerals and the availability there. Metallurgical results are starting to come in now, and it shows it really is amenable to mining and extraction. So, are there other tamaracks sitting out there? You can see those red circles along that north contact of the volcanic rocks. Look at the orientation of the holes. Okay, they're oriented oblique to where another tamarack could be sitting. We have to get a drill in there. We got to get a drill in there soon and test those holes. We got to drill eastwards through that contact, looking for other rolls like you can see in the tamarack just to the north of that first red circle there. Okay, lots of opportunity for other base metal occurrences with gold tenors to accompany it. Our second interesting area, close to the mine site, is Froome. This is a sort of isometric view, and this one is actually looking westwards, and the opposite is the Tamarack site. And it is about, as Rick said, about 800 meters from our existing workings. We spent, in the order of one rig was in there, drilling about 20,000 meters since the springtime on the northwest flank. If you see that red resource, they've been drilling there trying to extend the resource. And as you saw in the press release that just came out yesterday, we have extended it or expanded it by 14%, 22,000 ounces. We've grown it to 181,000 ounces. While that program was underway, we moved a rig up to the north. And we were drilling a hole across the strike extension, or what we thought would be the strike extension of the Black Fox deposit, when we hit an entirely new zone, a new segment, and it ran, you can see, 116 grams over 4.5 meters of core length. We call this our Froome footwall zone. It appears now to be running parallel to the main Froome deposit, as I said, about 150 meters to the northeast. We have a rig in there right now, and it's going to be focused there, I can say, for the next few months, doing a lot of infill drilling. But you can see the real-term impact that's going to have on the mine plans that Rick was talking about. This is what it looks like in core. You can see all that nice, shiny, visible gold running along the margins of that quartz carbonate vein as it's intruding in on these altered mafic flows. There's some of the values that we had, 7.9 grams over 4 meters, only 45 meters below surface. And as I said earlier, 116 grams over 4.5 meters of core length and 75 meters down. So again, this should be near-term access. You can see where it sits, that black bar, where it sits relative to the Froome, the little red blip, and over to the main Black Fox deposit. Is there an opportunity for more of those? Well, there certainly is. Look at those brown boxes. Those all indicates areas along these sort of braided conduits, these structures that cross through the property for over 7 kilometers. If you stack those up, you could probably have close to 30 kilometers of untested structure. This is what we focus on, as Sylvain said, when we had a think tank session back in early 2018. We came up with 22 sites that we feel warrant exploration. And this is where we've sent our rigs to. All those stars indicate where we've gone in and done first pass diamond drilling. Okay, a lot of them are into areas that have not seen another drill hole in 20 years. We drilled 64,000 meters so far this year just from surface. We've shipped away 30,000 samples for analysis. And these are the sort of results we're getting. We call this like a heat map. You look at those brightly colored circles, and the diameter of the circle sort of accentuates an improved gold grade, or a hot color also indicates a gold grade. So like, if, for example, you look at the magenta circle, it is a 50-gram contour. That would mean like a grade width contour. That would mean you could have 5 grams over 10 meters of core length, or what I'd much prefer seeing is 25 grams over 2 meters of core length. So lots of high-grade opportunities. Most of those hits have been shallow. Okay? Throughout the year, we've been sort of following and drilling, and I I'm confident to say we have 7 brand new gold occurrences on those trends that a year ago we had no clue even existed. So what I'd like to do is give you 4 examples of these new occurrences and to show how they sort of differ from certainly the traditional zones that most of my colleagues see along that Dester-Porcupine system. So starting off with the Gibson Southwest, back in March we were drilling a sequence of holes basically from claim line to claim line across the extension of that dark line you can see there that we call the Gibson-Calur Fault Zone. And on the second hole of the program, we'd barely got the core into capturing solid rock when we hit this really nicely developed quartz anchorite vein system. Look how broken up that is. That's a good sign for us geologists. It means that the rock has expanded and contracted, expanded and contracted. And within that, all this quartz anchorite is intruded. And you can see those sort of brassy looking sections. That's visible gold. There's about a dozen spots in that one piece of core. Well, when the assays came back from the lab, wow, it ran 639 grams over 1.2 meters of core length. Okay, we have 1 follow-up hole so far. We hit the vein system, the results are sort of low, but it's wide open. Okay, we intend to get back in there, I'd say within the next month. Going to a second interesting site. In the central portion of the property where you can see that yellow star is what we call the Pike River segment. We were drilling back in the summertime and we encountered a braided system of quartz veins running at a low angle to the core axis. Again, you can see sort of my grease pencil marks. There's a lot of visible gold along the margin of that vein system. That thing ran 35 grams over 3.3 meters of core length. Now this isn't just like a one-hit wonder or some sort of fluke, because the following 4 samples on that braided system, they all ran, look at that, 21 grams, 80 grams, almost 7 grams, and 15.5 grams. It shows that the system, I guess, has legs, and it gives us good encouragement, and we certainly will be following up on that. The third opportunity, in the Grey Fox area, where, as I said, our predecessors had spent a lot of time developing a resource of 450,000 ounces, or sorry, 465,000 ounces, we did some structural studies. We had a really strong indication that we believed that there was a vein set, a distinct vein set that ran perpendicular to the majority of the veins in that area. So we went in with a diamond drill. We drilled 17 quick holes over 140 meters of strike length, perpendicular to the main trend. And these are the sort of veins we got. You can see that we call that crustiform texture. And again, it shows the multi-stages of intrusion going on within the rock and bringing the gold with it. That particular sample ran 16.1 grams over 3 meters of core length. And as Rick was saying earlier, this is right in the backyard of where we've been studying about putting in a potential ramp to exploit that cluster of resources in the Grey Fox area. And our fourth, and I find actually our most intriguing new discovery of mineralization, is in the central Gibson area. We call this the Gibson Deep. While we were drilling some historic veins that had only shallow extents, we were drilling down underneath them, we entered into an incredibly strongly brecciated or almost crushed or milled section of rock, almost like a granite. You can see all that shiny pyrite and black corite that is exploiting all those fractures, those dilatant zones, and with that came the gold. Okay? It ran, in the bulk situation, 3.1 grams over 34 meters of core length. And within that, there was a high-grade core, lots of fine visible gold that ran almost 10 grams over 7 meters of coring. Okay, we're very excited about this. The geologists actually right now are going back to a lot of these old historic logs. They're looking through the recordings for mentionings of brecciation or crushing or fracturing, and we're going to try and hook these things up. We're going to be sending a drill in there probably for the remainder of the year. So I just want to shift the focus a little bit off to the west. If you jump in your truck from the Black Fox mine, you head westwards. you'd come to our stock property. As I said earlier, it also is situated on the Desert Porcupine. It straddles that major structural conduit. Hardly any exploration has gone on over the past 20 years. Okay, we originally had budgeted 10,000 meters for drilling there. So far, we're almost 23,000 meters. Because we really like what we're seeing, we're likely going to push that budget up towards 25,000 meters by year end. We have 3 rigs turning there right now today. This is sort of what it looks like from a satellite view. St. Andrew Goldfields had mined there back in the 80s and 90s. They had extracted 137,000 ounces of gold at about an average grade of 5.5 grams. But they'd left lots of gaps. Again, they were just consumed with trying to get the ore into the mill. They didn't have that luxury of doing outside exploration. Okay, you can see about 800 meters east of the operations, there were some old historic holes that indicated values in the 2 or 3 gram range. We went in there with 2 rigs this winter. We started following up and verifying where those holes were, and we've been drilling there ever since. Things are really looking up. We had that press announcement yesterday, which I'll talk about in a second. And on the way to stock, there's a big gap. There's a 400-meter gap without hardly any holes in it whatsoever. So we've recently put a drill into that area, and we've been trying to expand our knowledge of that gap zone. About 2 months ago, we moved a big rig over to the actual old mine workings area. We started drilling it from south to north, and to see what the down plunge projection of that deposit is. Previous drilling back from the 80s and 90s only went down about 400 or 500 meters vertical. This is what it looks like today. This is the same extent. This is a vertical slice through that satellite image we just saw. Okay, you can see some of our good numbers there. So over in the stock east, where we're looking at more of a shallow bulk situation, and then into the gap, where we're seeing almost a gram over 35 or 35.1 meters. There's no reason those 2 circles can't be connected up now, right? And for the down plunge extension of the mine, you can see we got some deep values such as 5.6 grams over 3.3 meters of core length. While en route to that main target, our geologist notices very altered, very silicified, very mineralized porphyry unit above the main target window. We had that all analyzed, and it came back 0.92 grams over 33 meters of core length. This now introduces an entirely new target just a few hundred meters away from the existing workings. Needless to say, we have a rig right now, and it's drilling that off. So this is what it looks like today. You might have seen the press announcement we came out with overnight. We now have an initial inferred resource at Stock East. It depends how you look at it. I have the numbers there. If you're up near surface and you're looking at from an open pit bulk sort of view, we have a 40,000 ounce resource. Further down, we're into like an underground mining scenario. We have another 73,000 ounces of inferred resources, averaging almost 4 grams per ton. As I said, there's no reason to suspect that these things are terminated or truncated at depth. You can see on that nice image there, those warm colors, again, represent a tenure of gold values greater than 10 grams. So you can see the occurrences. Look at all those magentas and purples in there. Those are high-grade gold values, down below the workings particularly. And as I said, these structures are wide open to depth. As we have 3 rigs there now, we have no intention of moving them off the property, at least for the next few weeks. And they're continuing to turn, and we're continuing to explore. So just sort of wrapping things up, you know, we always talk about footprints and things in a lateral sense. Well, as I said earlier, a lot of the major gold deposits have a relatively short strike length. So they actually have a small footprint, but they have a long plunge length. This diagram really shows that nicely. These are the major gold mining camps within eastern Canada. Look at the depth extensions of a place like Kirkland Lake or over at the Bousquet mine in Quebec compared to our sites here. We really are just scratching the surface. That recent 55-gram hit we had from underground is barely at the 1,050 meter level, half the depth of some of these other more historic camps. Okay? So just wrapping things up, as I said, 2018 has all been about progress. It's been about opportunity. We've had the opportunity to expand resources adjacent to our mining operations. We've had the opportunity to build a really good exploration team and move forward. Okay, we had rapid escalation from 0 rigs in mid-2017 up to 11 rigs by March or April. Okay, we've come up with 9 new gold occurrences, and we have numerous occurrences left ahead to explore. Okay, I invite you to, after this is done, please come over. If anyone really does want to talk rocks, I'd be happy to do that. We have lots of core on display here. Come on over, have a coffee, and take a look at the core. I can show you some of the visible gold. And just in wrapping up, you know, back in the wintertime, I live in Timmins, and I was walking through the local grocery store, and I'd spent almost 20 years with the Goldcorp succession of companies in the Timmins area. I worked at the big mines like Dome and Hoyle Pond. I bumped into one of my old geo buddies, and he said, "Man, what are you doing? Why did you jump to that tiny little company out in Matheson? Like, why would you do that?" And I said to him, I said, "Why wouldn't I?" I said, "It's been a fantastic opportunity." I said, we just finished that targeting session. I said, "We got 22 new sites to hit." I said, "We have 11 drills turning." I asked him, "How many drills do you have turning right now?" I guarantee you they didn't have 11 rigs turning, right? This is a great opportunity, and it's just early days. So please stay tuned, and hopefully a year from now, I'll be able to give you an even better update. Thank you.
You know, Ken, that's a really tough act to follow. But my name's Charles Sulfrain, and I would like to tell you about our exploration efforts at Gold Bar in Nevada. Now, you spoke about opportunity. I think that is a story that is in common with what we have, but our opportunity is yet to come. Gold Bar is a Carlin-type deposit located in the heart. Oh, I'm going to have to get my slides going here. Gold Bar property is a Carlin-type deposit located in the heart of the Cortez Trend, there in the center of your map of Nevada. Now, I've listed on the slide 13 other prominent Carlin-type deposits which together have a gold endowment of more than 200 million ounces along these 3 gold trends. First, the Carlin Trend, that's the northernmost, then the Cortez, where Gold Bar sits, and the Getchell Trend up on the upper left. Now, I want to emphasize that Gold Bar is a Carlin-type system. It shares the same attributes common to the largest Carlin gold deposits. It sits adjacent to a regional scale fault, the Cortez Wall Fault, and if you look at the map, you'll see that that cuts from the upper left to the very bottom of the map on the lower right. Adjacent to that wall fault on the bottom end there is the Roberts Creek Fault. Both of these structures are important because regional structures often have a strong influence on hydrothermal movement and ground preparation necessary for large gold deposits. Gold Bar's geology is identical to large Carlin-type systems with respect to host rocks and alteration as well as structural setting. It contains the same micron-sized gold mineralization. As well, it may be related to igneous intrusions of the same age and type as other Carlin deposits. And perhaps most importantly, gold mineralization occurs across several stratigraphic horizons. Now, if you remember anything about my presentation, like Ken was talking about, we have opportunity here. Gold Bar property provides an extraordinary opportunity for discovery. For more than 5 years, McEwen was not able to explore the Gold Bar property. The very lengthy permitting process delayed our ability to properly investigate the potential of Gold Bar. However, once our master plan of operations was approved in the fourth quarter of 2017, we were free to resume exploration efforts. Once we were able to resume this exploration, we completed a first round of resource expansion and pit delineation drilling and an extensive exploration program in the first half of 2018. With the completion of that program, all of the key information necessary to develop high-quality drill targets was brought together for the first time to model our geology and initiate a new area of exploration at Gold Bar. This slide summarizes some of the important points that I'd like to cover, because we're now able to further test the exceptional potential to extend to known gold deposits, which in turn will help extend the current life of mine. Explore for new deposits, both shallow oxide and deeper, higher-grade sulfide mineralization, and hopefully discovered stacked deposits in multiple host horizons. Gold Bar really is a target-rich environment. During the first half of 2018, as I said, our program concentrated in this high priority phase 1 area, and that's in the upper left-hand corner of the map on the slide. And this drilling generated multiple positive drill results as shown by the drill highlights in the red text, including 2.5 grams per ton gold over 10 meters and several other higher grade intercepts. As well, we show some of the mineralization in that form of grade times thickness, as we call it GT, or the grade times meters, grade times width. Now, our first half program of more than 13,000 meters of reverse circulation drilling was completed in May, and a near-pit resource update was just announced last night in our press release, and it's going to help us to extend the mine life beyond our current 6-year mine plan. Now at Gold Bar, some of the primary controls of mineralization occur along 2 structural zones, each greater than 5 kilometers in length. One is an elongating incline that stretches northwest, southeast, and is host to our main portion of the Gold Bar deposit at this time, as shown on the map there. The Gold Bar South resource sits along a north-northwest, south-southeast trending zone along in the southeast corner of the slide here, and that's parallel to the Roberts Creek Fault Zone. Now this first half exploration program, while it focused on the main areas, also included extensive geophysical and geochemical surveys, as well as detailed geologic surface mapping elsewhere on the property. These are combined for the first time at Gold Bar, along with a drill data review, into an exploration model that produced several compelling targets. The results of our new exploration program generated a target-rich environment, and we're now ready to test these new targets for both shallow oxide and deeper, higher-grade mineralization. I'll address 4 of these areas over the next few minutes. The first one I'd like to mention is ML. This ML target is a new, never-before-drilled outcropping target that includes surface mineralization and alteration. Zooming in a bit, we're going to be testing these targets that were discovered by geologic mapping of outcrop alteration and surface sampling for both geochemistry and gold assays. The initial area in the dark red oval there measures about 400 by 800 meters, but that area is only a part of a larger target zone. Now the mapped host rocks at the surface are the same units as host other deposits, both at Gold Bar and other Carlin-type deposits elsewhere in Nevada. This entire area, as I said, was never drilled, and we will have a rig there in a couple of weeks. Next is Cabin Creek. Our Cabin Creek deposit is currently undergoing pre-strip and is actually open down dip and to the northeast, following the arrows going off the slide there. 4 near mine drill holes will test just a small portion of the 600 by 300 meter target. One of the things I'd like to point out about this deposit, though, is that there are higher grade portions within it, like the intercept shown here of the 3.3 grams over 16.6 meters. And the photo of the core there on the bottom left suggests that additional higher grade areas certainly may be discovered within and adjacent to the known resource. Our next area is Gold Bar South, and that's located in the very southeast corner of the property in the lower right there on the map. It too is a shallow oxide deposit, and it has a drill indicated resource of about 101,000 contained ounces of gold at 1 gram per ton. The Gold Bar South deposit follows bedding of the host silty units that are in outcrop along a north-northwest trending ridge that parallels the Roberts Creek Fault Zone, as shown on the map here. Get this working. And similar to ML, it's open along strike at a depth. Now on this next slide, I've superimposed one of our geophysical survey lines. It's a CSAMT line, which is a commonly used geophysical method used to determine how rock responds to very weak electrical charges, either resisting or allowing electricity to pass through. That creates an anomaly. If it's very resistive to electricity, that is an anomaly that might suggest silicification. If it's very conductive, it might create or express alteration. And both of those are good for testing of drilling targets. You can see the 3 target zones below the surface here at the bottom of the map area, and we hope to be testing those later this fall. Because at this point, it's a compelling target, and it's well beyond the limits of our known mineralization. Now, this last target area I want to talk about is the one that is most exciting to me personally, having worked at Goldstrike Mine with Barrick for more than 18 years. This target area consists of deep targets. These areas that are shown on the map as the deep target zones, they combine for over 10 kilometers of strike length of untested area. These targets underlie some of our shallow oxide deposits, and this slide shows 4 of our first deep drill targets and suggests how the deposits might occur. You know, I worked at Goldstrike for 18 years, and I currently work at McEwen with, sorry, Rob, with 2 fellows that I used to work with at Goldstrike and Barrick. And they saw this slide, and the first thing they said was, well, that looks like Goldstrike. That's the same type of situation. You have these shallow oxide deposits and down dip potential as well as these lower units. And they were wondering if I was just kind of copying some of the old information, but this is what we have, and I think it's extraordinary, the potential that remains untested here. Also, if you look at the core in the lower left-hand part of the slide, you'll see that these grades are substantial, and this is exactly the same type of mineralization as you'd expect to see at Deep Post, at Betsy, at Cortez Hills, and other deposits like that. These deep higher grade deposits are a hallmark of Carlin-type systems. They may be stacked under these smaller oxide deposits, or they might have no surface expression at all because of overlying impermeable units. Now, starting in mid-August and continuing through this fall, we're conducting a drilling campaign of both reverse circulation and core drilling. We're planning on more than 5,000 meters of reverse circ and another 3,000 meters of core drilling. Successful exploration of these targets may extend mine life. As well, they may also hold the key for Gold Bar to become a world-class deposit. In closing, I stole this slide as it's similar to one of Ken's because I think it really tells the story, showing a section along the Gold Bar near surface deposits in the center and the oxide deposits from the post-Betsy area at Goldstrike. And these are all shallow oxide deposits. But taking a look at the deep post-Betsy and Screamer deposits here and the Cortez Hills deposits, which together are over 60 million ounces of gold endowment, I think we are just scratching the surface. I think you should remember at this point that Gold Bar is an extraordinary opportunity for discovery. There is room to grow. Thank you. And next is Nigel Fung.
Hello, I'm Nigel Fung. I'm the Director of Mine Planning here at McEwen Mining. And I'm going to tell you why I'm excited about our Timmins properties, which we have acquired from Lexum. The Timmins properties consist of 4 previously operating gold mines. They are the Fuller Mine, the Davidson-Tisdale Mine, the Paymaster Mine, and the Buffalo Anchorite Mine. Collectively, they contain 1.4 million ounces of measured and indicated gold resources in the ground. Three of these properties, Timmins properties, are immediately adjacent to one another, and they are contiguous with the famous and prolific Dome Mine, which produced over 17 million ounces of gold over its 107-year mine life. All of these properties have reported reserves in the past, and we are currently working to confirm and validate these historically reported reserves. McEwen Mining acquired the Alexan properties in the spring of 2017, and later that year we acquired the Black Fox Mill. This was fortuitous because the Black Fox Mill is near to the Timmins properties, has excess capacity, and is technically capable of processing the type of mineralization that occurs at the Timmins properties. In turn, the Timmins properties are important to McEwen Mining because, one, they will help feed the Black Fox Mill in order to produce more ounces, and two, because they will help to reduce the Black Fox Mill's fixed cost per ounce, thus helping us to bring down our overall cost per ounce. All four of the Timmins properties are very exciting to me, but most exciting at this moment is the Fuller property, because it has the shortest timeline to production. In fact, it is our goal to bring it into production by 2021. I consider the Fuller property to be a real gift to McEwen Mining. Let me tell you why. The Fuller mine is essentially ready to be mined as soon as it is permitted and dewatered. As you can see in the photos, the Fuller property has a functional portal, an access road, and furthermore it has a ramp and air raises that descend from surface down to the 650-foot level. A real gift to McEwen. In total, Fuller has over 5 kilometers of underground development, which was built by one of the previous owners between 1986 and 1989. At today's cost, that's a value of over $20 million of capital. And in addition to the ramps and the air raises, there are also access tunnels on the mining levels and ore sills that give us the ability to mine the mineralized rock in areas known as stopes. Now here's a historic photo taken during operations at the Fuller mine during the 1980s. At the time, the operating owner had reported reserves in the stopes nearest to the ramp. They were actually at the point where they were about to mine these stopes when they had to stop operations due to financial difficulties. This left these stopes unmined and ready for the taking to this day. Again, a real gift to McEwen Mining. Over the past few months, we've been looking over the old exploration, development, and operation maps to verify existing infrastructure. I was pleased to find that there exists an abundance of historic maps in our physical possession that confirm their existence. I'm currently working with the Black Fox technical team to produce a mining plan for the Fuller mine using our current mining techniques, and which is based on a block model that SRK Consulting produced for us last year in 2017. The result of all this work will be published later this year in a preliminary economic analysis, which will subsequently lead to a feasibility study that will include a bulk sample, meant to justify mining Fuller within the next 36 months. And then once Fuller is started, we will repeat the process for Davidson-Tisdale, then Paymaster and Buffalo Anchorite, with the aim of bringing the mill feed at Black Fox Mill up to its rated capacity for the years to come. Thank you very much. I'll now turn the microphone over to Adrian Blanco, who will speak about the Phoenix project.
I need the... Okay. Hello, I'm Adrian Blanco, General Manager, Mexico. El Gallo Gold is an operation located in Sinaloa, Mexico, and it's 100% owned by McEwen Mining. It is a mature gold producer that has depleted several open pits and has now ceased mining in the second quarter of this year. Although residual leaching activities for gold production will continue for about 2 years. On the other hand, El Gallo Silver is a project that obtained all necessary permits and feasibility in 2012. But then silver prices came down in 2013, and it became not viable economically to build it as a standalone operation. So then we came up with an idea to reprocess the El Gallo gold tails to pick up 1/3 of the gold in the existing heap leach. And by doing that, we also built on the idea on mining and processing 4 satellite deposits at the existing central mill facilities, including El Gallo Silver, thereby increasing our operational mine life by 12 years. And we call it Project Phoenix. Phoenix represents a significant improvement over what the original feasibility study suggested, and with a cleaner environmental closing. Just think that a few months ago, El Gallo was almost done. And now it looks long life and profitable due to lower capex by reusing and expanding existing facilities. Phoenix project contemplates a 2-stage development process. Phase 1 includes the reprocessing of material on the heap leach from the previously operated El Gallo Gold. And Phase 2 includes the mining of the open pit silver and gold ores from multiple new deposits. All of such deposits being located at a close proximity within McEwen Mining's property. Phoenix envisions a 60% silver and 40% gold production. And there is also exploration potential that could extend mine life beyond 12 years. El Gallo Gold transitioned from mining surface oxide to deeper sulfide ore. Sulfides are typical of late-stage operations. But now El Gallo will transition to have the possibility to efficiently process sulfides. Phase 2 envisions mining from El Gallo Silver, Palmarito, El Encuentro, and Carrizalejo deposits in that order. Phase 1 will be a mill grinding and hybrid CIL circuit. Phase 2 will add flotation technology to the intensive leaching system. On July 9th, we filed the preliminary economic assessment of Project Phoenix. The key outcomes of the base case are a yearly production of 47,000 ounces of gold equivalent, 60 million NPV, 28% after-tax IRR, payback period of just over 4 years. The project also has a cash cost just over $700 per ounce for Phase 1, which is very competitive. And we're still looking for ways to reduce the cost and capex included in the PEA, and therefore improve the project financials. Phoenix also calls for a better and cleaner environmental remediation process. Tailings produced will be stored in a mined-out open pit with a system designed to maximize tailings consolidation and water recovery. In-pit tailings are being done successfully in Australia, and we're confident that it will work for Phoenix. It is still subject to environmental approval, but we're working with the Mexican government to obtain it. Also, it leaves the area much less impacted at the end of the mine life without a big hole in the ground. And the in-pit storage saves a lot of capex on the project. Again, innovative approach to dealing with tailings. We are proceeding with our feasibility study for Phoenix in Mexico and continue to progress various permitting matters. Filing of the environmental permit modification will be in the next 2 weeks, and the approval expected date is in early 2019. The drilling and test work for feasibility study is already progressing, and we expect to reach a construction decision stage in late 2019. Finally, Phoenix represents the future of El Gallo district in Mexico, extending the life for an additional 12 years. We believe we have the right plan, are in the right place, and have the right people. And by expanding the mine life and bringing value to the business, we contribute positively to McEwen Mining's overall growth strategy. Thank you. Now over to Donald.
How do you move the slides, Adrian? That's it. That one? Okay, thank you. My name's Donald Brown. I'm the Senior Vice President for Projects with McEwen Mining, and I'm with particular focus to our Los Azules project in Argentina. Los Azules, as it says quite clearly on the slide there, is one of the world's largest undeveloped, higher grade open pit copper deposits. And you can see some of the attributes there just highlighted. Last year, we produced the 2017 preliminary economic assessment. These were the principal attributes that we listed in that. It's got compelling financials. It's a world-class copper producer for a long mine life of 38 years. It's in Argentina, a country we're already operating in. It has logistics through Chile, a very close port to the project on the Pacific Ocean. However, it comes with concerns. And please remember these concerns. They're going to come up quite a few times in this presentation. Needs de-risking, access is a challenge, and also reliable power supply. Let's look at these compelling financial attributes. 20.1% after-tax IRR, 2.2 billion NPV. Seriously impressive values for any mining project, let alone a large base metal project such as this. It's got a peak capex of just 2.4 billion. This is very low for a project of this size. We're able to keep it that size by doing a phased implementation approach. We do a 50% production increment after 3 years. And this is done from revenues, not from capex. We also don't have to construct a port, $300 or $400 million expenditure, not necessarily, because we're already going through an existing port with existing concentrate export facilities. We have a capex payback period of just 3.6 years from the early higher grade ores we encounter at Los Azules. It just gets better. The C1 costs are really low for a copper mine, just $1.13 a pound. We have a low stripping ratio, and we're going to be a very high mining rate, 80,000 tons per day, increasing to 120. So what does this do to Los Azules? It's a world top 25 copper producer when it comes online. Not only that, it's also going to be one of the world's lowest cost producers. Analysts are waking up to Los Azules. Here we have Goldman Sachs with an evaluation. They've got an IRR of 24% and a higher NPV, but they have the same concerns we have. It's got infrastructure challenges. They see Argentina as negative. So where are we? This is an extract of the value curve. You can see it starts off at the bottom very flat. That's where we were. We went through infill drilling. We produced there, if the mouse works, yep, the PEA publication, which I mentioned earlier. And now we're into these next steps to take it further up the value curve. These three next steps of project de-risking, project enhancements, and project permitting. Now,
Let me talk about first the project de-risking. Now here you see a panorama of the Los Azules project site. It has a natural elevated site above the mine. You don't see any other flat ground at elevation in that photograph, and that's because there isn't any. This natural elevated site is perfect for us to put the project concentrator facilities. Why do we need it elevated? Because we're mining 120,000 tonnes per day. We must have gravity deposition of tailings for the life of the mine. We can't be in a position of ever pumping that quantity of tailings. So this is a vital attribute that this project has, and with this site right next to the mine. With this, we add the primary crusher right next to the mouth of the mine. The trucks come out of the mine, within half a kilometre they've dumped the product into the crusher. The crusher is linked to this elevated process plant site by a simple overland conveyor. I also want to mention the tailings dam. This tailings dam, you can see it in this panorama. It's just a few kilometres away. I was recently at a mine where the tailings dam's 40 kilometres away. I know of a mine where it's 80 kilometres away. Las Palambras on the other side of the Andes Mountains, it's over 100 kilometres away. Ours is just next door. What does this do for us? That tailings dam blocks the watershed coming from Los Azules. That's vital. It means that that tailings dam separates the contact water environment, water contacted by waste dumps, by the tailings, by our operations, by the mine, by dewatering at the mine. It separates it completely from the natural environment. It's a physical, impermeable barrier. Think of that when it comes to permitting. Finally, just to show the complete situation, I've put the tailings storage facility there, the waste rock storage facility. We're a really compact project footprint, the envy of almost any other large base metal project. So just looking at those superior attributes there, there's a list of them. So what did we do? We needed to prove this. We needed to de-risk this. There's many interactions between these different facilities. We needed to have certainty that this project facility was achievable. So we de-risked it. This year, in our available weather window, we drilled 70 holes for geotechnical investigation. We did all these other items you see there on the list. But most importantly, the bottom two lines there, the outcomes from this were our project facilities that we propose at Los Azules were all stable sites, optimal locations. It's completely viable. With that defined, we could then proceed into our environmental permit application. So our second next steps were project enhancements. We know we're access challenged at Los Azules. We have a 110-kilometre access road, crosses over a river 9 times, numerous mountain switchbacks, 2 really high altitude passes to cross that block with snow. We wanted to have an alternative access. We wanted an airstrip, and we wanted to evaluate a new alternative route that had previously been declared inviable. Moreover, we needed to define a new high voltage power transmission route because the current route was proposed over those high mountain passes, and similar projects in other parts of the world that do the same high mountain passes with their transmission lines have extremely unreliable power. We don't want that at Los Azules. In Chile, we needed to confirm our project logistics solution and confirm the port. We've done that. So, going on to Los Azules airstrip, you don't have to be an aeronautical engineer to believe that that's a good site. We've defined that. Going on to our access route, here's a view of part of the alternative route. Los Azules is way there in the distance and up on the left-hand side, can't really be seen. This is a challenge but that's all it is. We were in there doing our investigations, all work done on the ground, helicopters, expeditions on horsebacks. Our conclusion is, we can do this. There's 20 kilometres of difficult terrain, but that's all it is, difficult. We're going to achieve that. Big tick for this. Same photo, power transmission line. It's going to follow the same route as the access road. Totally logical solution. In Chile, our logistics route, we did a lot of investigation on this. We've spoken with private landowners, regional authorities. This is going to happen. So, knowing that we de-risked the project, we went into project permitting. We've already completed all of those studies. Many of them had been in hand for years before. We brought them all up to date. Look at that date at the bottom. We anticipate our environmental submission date to be just a few months away, in the first quarter of next year. And also we're anticipating receiving that environmental permit for exploitation later the same year. So what are our achievements in the last year? All-year access road, reliable power solution, an airstrip, project facility de-risk confirmed, environmental security from the tailings dam. Now, power line and road aren't going to be going through any towns anymore. So we have superior community relations to look forward to. Our logistics through Chile, all defined. Our environmental permit, it's happening. And we've done all of that for less than $10 million, just in the last 12 months. Going back to the PEA, the main concerns, needed de-risking, done. Access challenged, not anymore. Power supply challenge, not anymore. What are we left with? All the bits we want. It's compelling. The next 12 months for Los Azules, we're going to commence the pioneering work to get that new road through to site. We're going to get our environmental permit in. We're going to receive the permit. We'll get into some detailed design of that access road to make it good for heavy vehicles. We'll get into a power supply agreement with a power supplier. We're going to continue evaluating some seriously value-adding opportunities, and there are several. And our anticipated expenditure for all of next year, about 10 million. So where are we? Now we're into the steeper part of the value curve. But it's important to focus to our objective. And that is that by 2020, the earliest available final investment decision will be available to McEwen Mining at Los Azules. And what's it done to the asset? Here you have Wood Mackenzie publishing base metal transactions over the last few years. They're all in the region of cent a pound, 3 cents a pound, some there at 15 cents a pound. Look at the values at the bottom. If it was 1 cent a pound, Los Azules would be worth 300 million. If it's 2, it's 600. If it's 3 cents a pound, it's 900. I can tell you that it's certainly moving right. Thank you very much. I'll hand over to Nathan. Thank you.
Thank you, Donald. Innovation. Well, here's a word that we hear about or read about in the newspapers on a daily basis. But what does it really mean? If I went around this room, and I won't do this, and I asked you for a definition, I bet I would get 100 different answers for what the word means. Here's some definitions that I like to use. People use R&D and technology and innovation differently, but they're different. If I took a sack of money and drove it up the street to U of T and waited 4 years, I would get some knowledge in return. Innovation is the reverse operation. If I took that knowledge and turned it into money, or maybe better into gold, that's the definition of innovation. Continuous improvement is also different. Improvement is doing things better. Innovation is doing things differently. If you look at the three circles here, we need all three of these things. And Sylvain mentioned it, people. People is a critical part. That's where we get the creativity, and that's where we get the impetus to push these things through the organization. We need the need, and there's lots of needs in McEwen as well as the mining industry in general, and lots of ideas. Couple of myths. There's no shortage of ideas. They're a dime a dozen. The key is to get these into operation and to make money out of these things. Let me introduce you to the MarTech curves. I find this fascinating. What it says is that technology is exploding at an exponential growth. But people and organizations tend to think of a slower term and more linear. And this gap gets bigger and bigger. So every year we get more and more ideas, and that's not the problem. The pragmatic approach, the systematic approach is which one of these are we going to pick to use within McEwen to differentiate us and to get some value from our operations. There's nothing inherently wrong with continuous improvement. In fact, Chris from Black Fox showed us $1 here, $3 there, and before you know it, you have $63 an ounce, and that 63 will turn into 100 by having, those were only 5 things on his chart. But eventually you get to a point where you need to look at things a little bit differently. Often it's just a matter of perspective. And we had some examples. I'll just pick on a few that I heard. We heard one from Simon about sensors. And yes, if you're in that Goldilocks zone, you'll optimize your gold recovery, but there's added benefits, less reagents, less costs. If you're using less water, that's critical in a big chunk of this world. We talked about the ventilation on demand, so you're doing that for energy, and there's a lot of savings there, but there's great factors, safety factors, by keeping track of the people, make sure they're in the right areas. So there's always added benefits. Core, we saw some nice pictures of core. There's some in the back room over there. But the way a person, even a trained geologist, looks at it, they're looking at it obviously with the visible spectrum, but machines have hyperspectral. They can look at using X-rays, looking deep inside the rock. So here's the same core looked at differently. So what a geologist sees, what a machine will see are different. So using machine learning, AI, VR, and so forth, you'll get different perspectives. Digital twins, I won't have time to go into this, but ask Jeff, we're building a virtual model of the gold bar plant to make sure the operators are trained and it runs efficiently even before the plant is used. Bioleaching, bugs love eating carbon, they love eating sulfur, they love eating arsenic. So if you have deposits like we have in Nevada, like Tonkin, which has 1.6 million ounces, the bugs can release some of the gold, which right now has no metallurgical flow sheet. Tails, we tend to think of tails as some soupy mess, but here's a sample of one of our projects where I turned tailings into a solid. And Adrian had a great example. So here's a riddle for you, and there's no prize because Adrian already gave the answer. But what do you do if you have almost 10 million ounces of a residual leach pad residue, which has 1/3 of all the gold that was ever explored for, mined, leached, and so forth, and right next to it you have a big hole in the ground? Well, obviously, our solution is you reprocess the tailings. In the old solution, we would have had to gone in, rinse out the cyanide, revegetate, and here's a better solution to it. And just look at the numbers. They're staggering. In the 2012 feasibility study, to handle the tailing solution, we needed $17.35 million. The new solution is like a quarter of the cost, so it's a more elegant solution. You get the gold out and you're saving money at the same time. So this is one way of turning a liability into an asset, a big asset. Other times it's just a matter of moving the parts, the pieces of the puzzle apart. We had El Gallo silver, which isn't economical. We had the leach pad residue, which was a liability, but moving the blocks around, now we have a good solution, and it allows us to treat other things like palmerito. And now we have a flotation plant. We could treat sulfides that are in some of the satellite deposits. So just everything we had before, just moving the pieces around, totally different outcome. I find this interesting. The expert, this is from Harvard Business Review, they're trying to make innovation think inside a box, but that's not my point here. So we have the core, the adjacent, and the transformational. So just like you're looking at a portfolio for your investment, we look at it the same way in the innovation world. A lot of the money is spent in the core, the continuous improvement projects, some of the adjacent ones where you're looking at it differently. People thought lead and zinc in Timmins was a nuisance, but with a flotation plant, we can have a new product. In Mexico, they had copper in solution, which is a nuisance, but we put in a new plant at the beginning of the year, and we already removed over $250,000 of copper into a saleable product. with copper, with gold, and with silver. So it adds up. So just looking at things differently, and then you put a little bit of your money in the transformational, which could change the industry, could change McEwen, could change the way we look at it. So we're looking at it as a portfolio. For example, drones, we have a project with U of T. So a lot of people use drones for estimation to see how big piles are. But we're using 2 new technologies. We have a new way of looking at fragmentation, the way we blast, the way we crush in real time to be used to go back and to get the next blast to optimize that. Inspection and monitoring. And here's one, hyperspectral. So like I showed before with the core, the drone is looking at the same pile differently. It sees textures, it could see grade, it could see different things. We can use that down the road for exploration. Ore sorting. This you hear a lot about in the news. If I talk to people, they tend to think of it as some kind of manual operation where you sort green glass from clear glass. But new modern sorters, they can sort on lasers, they can sort on x-rays, they can sort on colors, they can sort on a whole spectrum of things. And here's an example. Here's 3 rocks. If you look at the middle one, the machine doesn't even see it. That's invisible to the machine. It'll reject that. So if you're going deeper, let's say Black Fox deep, if you could reject some material, that's less to process, less to move, the dilution goes down, the grade goes up. If you have sulfides, the machine can tell, yes, this is a lead zinc sulfide, let's separate it from the gold ore, send the gold ore to Black Fox, and treat the sulfides in a flotation plant. In the bottom one, if you have other things like sulfides there, it'll send one way and the sulfides the other way. So modern ore sorters can work at thousands of tons per hour on a whole spectrum of different things. So I'll finish off where I started here with this little spectrum. So, you know, we're looking at a whole wide variety of things. There's no shortage of ideas. Our job is to pick the ones that make the most sense for McEwen, as well as mining industry in general. And we'll leave it over and let Rob finish off. Thank you.
Thank you, Nathan. And thank you, everyone, for joining us today. This morning, we issued 3 press releases in order that we could share our most recent results with you today. Perhaps it was unfair to give you all this information during lunch because it's hard to digest. But we wanted to illustrate the scope of the work that we've done and what we have achieved so far. So how do you put it all together? And essentially, exploration is working well for us. We're finding multiple new areas of gold on our property. That suggests we're going to have longer mine lives, lower production costs, better grades, and increasing annual production. We have valuable assets. We have a strong team managing those assets, and these assets provide us promising upside. Again, I'd like to thank you for joining us today. If you didn't get lunch, I think it's in the back. If you didn't get the press release, they're in the back. And if you'd like to ask any questions, I'd like to open the session to question and answer. But thank you. The question?
Into the new world of technology and all the other difficult things which come at us. Congratulations for your achievements as you go into the new life. We lost a big guy not long ago. He died. Barrick Gold's Peter Monk. But excellent. You're heading.
That's quite big shoes to fill, but Peter did quite a bit in the industry.
Yeah, I know.
Thank you.
Allow them to come in here. Yes.
I can say when we bought Black Fox, not only did we get 1.2 million ounces of gold and 50,000 ounces, albeit a short life mine, but we also got more than $180 million of tax loss carry forwards, which means if we are fortunate enough to bring the costs down and extend the life, profits at that mine are going to be sheltered for a very, very long time. So it's one of those things when you you pay 35 million for something that someone else put 560 million into. You get a few advantages. Yes.
One question on Black Fox. The sandstorm stream. What proportion of the mine does that cover?
Too much. The sandstorm stream covers the Black Fox mine, the Froome area, Pike, I believe, and it also has the gold component of Tamarack, but not the base metal. Grey Fox is totally free of it, and most of the property is not subject to a sandstorm stream. And to me, that's where we should be spending a lot of our time exploring, seeing if we can bring that production in and save ourselves the loss of 8% of our revenue.
Thank you.
You're welcome.
Rob, a McEwen event would would not be complete without a commentary on the gold price.
Gold. It's been a frustrating summer, but it looks, when you look at, first of all, commodities, and gold's often put into commodities basket, we're looking at a low point, a 48-year low point relative to equities. Commodities are cyclical in their nature, and they tend to be 9-10-year cycles, and we seem to be at the bottom of the cycle. Are we at the very bottom? It's hard to tell, but the downside risk from where we are appears very low, and the upside for all commodities looks good. For gold, if you look at gold equities, in the last 77 years, there has been 8 bear markets, major bear markets, and the one that we've come through, which I say ended in the beginning of 2016, was one of the longest and certainly the deepest in terms of decline of those 8 over the 77 years. There has been, in a slightly shorter period, there have been 6 bull markets, and saying that the bull market, you might not want to believe it, but we are in the early stages of a bull market that started in early 16. Of the 6 preceding bull markets for gold equities, 4 of them, or 2/3 of them, were up 600% or more, bottom to top. We've come up about 100% since 2016. And so if you use the past as a gauge of the future, you could say there's likelihood of a 67% probability of a 3-fold increase from where we are today, if not more. Gold is moving up in many currencies. Some currencies very rapidly, like the Turkish lira and the Argentinian peso, but they're not alone. And if you go back to the period 2000 to 2006, gold was moving up in dollar terms, but it wasn't moving as quickly in other currencies. And once it started moving in the other currencies, then there was a global effect, and it moved quite rapidly from there. Here we have the inverse. It's moving in other currencies, but it's not really moving that quickly. It is up in dollar terms, but not as much as in other currencies. And I think we are going to see a point where it starts turning up in dollars as well as these others, and you'll see the run coming. In terms of gold in a portfolio, there have been times in the past when gold has been a much larger part of the general market. Right now, there's one gold stock in the S&P 500. It's Newmont. And its market capitalization as a percentage of all the value of all the companies in the market cap of all the companies in the S&P 500 is 7/100ths of 1%. It's nothing. No one's going to put gold in their portfolio if it has that small a weighting in a portfolio or in an index. Now, the S&P 500 stocks represent 80%, almost 80% of the value of all the public companies in America. In 1938, Homestake, which was one of the largest companies on the New York Stock Exchange, was 4.5% of the value of the New York Stock Exchange. Around 68, it got up to 3.8%. Around 80, it was just over 2%. Now we're at 7/100ths of 1 for Newmont. Homestake disappeared when it was bought by Barrick. If you're a contrarian investor, which I know a number of you are, you're going to look and say, where have I made a lot of profit? And what is the potential for it doubling or tripling from where I am right now? Maybe it's time to rotate out of some of the areas where one has made a profit and look for areas that are out of favor. And that's where you'd be looking at gold and other commodities, because the risk-reward ratio there is much more attractive. The upside is much greater. I like gold. That's why I put another $25 million into McEwen Mining by way of debt. I think there's anyone who's played in the gold market has seen it. It does go in cycles. And when it takes off, it's rather explosive. Volumes are light, short positions are large. We're moving into what is traditionally, there's a seasonality in gold, and it's a more active period of the year in the fall than, say, the summer. I'd say, I think it's a good time to be in gold. Long answer. Yes?
Just a reminder, Rob, that for those on the web portal, they have the opportunity to ask questions online. There's one of the 3 buttons below the video feed to send in your email questions. So it's called PM. It's called PM. Just a quick reminder.
Yes, John.
Well, you seem to have more opportunities than capital is limited. Are the opportunities so good in the Timmins district that there isn't enough money for Mexico, or how do you rank the opportunities across the different districts?
We've been looking at that. We raised the debt so we could complete the construction of Gold Bar and have additional working capital for exploration elsewhere. There will be times when we're going to have to go back into the market and raise additional funds if we want to keep the exploration rate running at a high rate in Timmins, in Nevada, in Mexico, and doing some of the infrastructure at Los Azules. We've been fairly frugal to date, and I guess we're looking at those. The Mexican development for Phoenix is not until for about 2 years, big money, and big money is $40 million to start with, so it's not large money. Gold Bar will be getting its cash flow. One fly in the ointment right now is Argentina's imposed an export tax, so it's going to cut back some of our revenue coming from Argentina, our San Jose mine down there. But we're seeing all these opportunities, and I'd say we're just going to play it by ear. I'm just overjoyed what we're getting in Timmins, but I also like some of the targets. I'd like to test some of the deeper targets we've want to go after in Nevada. And Los Azules is a huge swing asset.
Sorry, just one for me. So I'm just wondering, how much metallurgical work have you guys done on Tamarack? I mean, is it going to require? It's not, I guess, it's not a standalone mill, but a separate concentrator on the back end of the stock mill. Is that how you're thinking of it?
No, we'd be shipping it.
Okay.
The Kid Creek mill is maybe 20 kilometers away from us. They have extra room in the mill, and if they didn't want to take it, we could. Near the mine in Matheson is a railhead, and we could put it on a rail and ship it to the Horn smelter in Quebec. We've done metallurgical work. It's floating at, Nathan could speak to that if you'd like.
Give me Mike.
Mike?
You want to?
Yeah, we did some tests at XPS up in Sudbury, and it floats really well. And also we wanted to see if we could separate the lead from the zinc, which we were able to do as well. So we knew it floated, and the selectivity was actually quite good.
And Tamarack it's 300-400 meters away from our underground development. It's a very attractive asset. Yes, Luke?
Yeah, we have a question online from Chris. Is there any plan to eventually hold some gold production as bullion on the balance sheet?
When I was at Goldcorp, we withheld up to 30% of our production. We had very low costs, and we didn't have a lot of capital requirements. So once we can get our costs down, generate a larger profit, and don't have any development needs, then we'd look to hold gold in our portfolio. All right. It looks like we've exhausted the questions. If you'd like to see the core, it's in the next room. If you'd like to talk to any of the gentlemen who were speaking, they're around and available for discussion. And thank you once again for coming. It's been great.